All right, you guys. Hey, this is your Uncle P, and I got a full presentation along with I'm going to be going to the charts towards the end of the presentation to cover this topic. This topic has been a long-standing topic amongst the retail trading family for many years, and there's very little real education on the perception or the perspective that the retail trader should have when it comes to drawdown. So I'm going to give you a full slideshow presentation, and then I'm going to go to charts so you can see exactly what I'm talking about. Okay, so the first thing is, of course, the topic is help my account is infected with DD. Now again, if you're new to trading, that simply means drawdown, okay? And that's why I put this picture here. So the topic we're going to be covering is how to manage your account when you're in drawdown. All right, let's go through the presentation. I hope you find it interesting. If you do, leave a comment below or send me an email to superezforex@gmail.com. Here we go. All right, drawdown, write this in your notes. You're going to need to take notes, please. Okay, you're going to need to take notes. It's probably going to be the best class on drawdown you ever saw. Simple, fast, but you'll learn something big. Here we go. Drawdown is a poor man's topic, okay? It is a poor man's topic. At the end of this presentation, you'll see exactly why it is a poor man's topic. So let's start with this. If I was in a room full of banks and institutional traders, would I even be having a discussion about drawdown? Yes or no? All right, let's get to this one. This says, why do the rich get richer? Banks and institutional traders do the opposite of what retail traders do. So what is it that they do different from us or from y'all? I'm on their side now. I ain't part of the group of retailers no more. All right. Here it is. Let's begin. Bankers and institutional traders use what? Higher time frames to do their analysis, such as they trade off the monthly, the weekly, the daily, and the 4-hour. What do retail traders do? The retail traders trade off of the shorter time frames, which is like the 1 minute, the 5 minute, and the 15 minute. And you say, wait, Uncle P, I get all that. What does that have to do with drawdown? You'll see. Watch this. If banks and institutions trade using higher time frames, do they use larger stop losses than the retail traders do? And the answer is yes. Number 2, if they use larger stop losses, do they get stopped out more or less than the retail traders? The answer is they get stopped out far less than the retail traders. Far less. Remember, banks and institutions, they do what? The opposite of what the retail traders do. Let's keep going. Who's afraid of a little drawdown? Does banks and institutional traders then fear drawdown? Remember, they use higher time frames to do their analysis. And then on top of that, they also use larger stop losses. So if you're using a larger stop loss, do banks and institutions fear drawdown? In other words, when the market moves a little bit against them, are they concerned about that? Number 2, do retail traders fear drawdown, and if so, why? Well, let's take a step back to the time frames. If banks and institutions are doing their analysis and they can see the ranges, and let me mute this. If the banks and institutions are trading from higher time frames, and so they're seeing the ranges from the higher time frames, and they put their stop losses above those ranges from the higher time frame. If the market goes against them a little bit, are they concerned about that? The answer is no. Why? Because they're looking at it from a higher airplane view, helicopter view. They can see the landscape more fully. So they know, okay, yeah, you may go a little bit this way, a little bit that way, but overall, I know exactly where you're going. So long as I stay outside of the ranges of where I think you're going to go, I'm not concerned about whether you go against me a little bit on one day or for a couple of hours or something else. I don't care. But who does care? It's the retail trader, the one who's on these short time frames and have no idea what the bigger picture is. So when the market goes against them, even 5, 10 pips, oh, I'm in drawdown. Oh my God, what am I going to do? I'm in what? I got DD on my account. I got DD. Well, why is that? Because you don't have a conclusive perspective of saying conclusionary information has told me that on the higher time frames, here's the range that the price tends to bounce in between before it makes its ultimate move. Now, I can't control what it does when I enter the trade, but I do know exactly about where it's going to go because I checked out the higher time frame, and therefore if it goes against me a little bit, pulls back, does a little pullback against me or whatever, am I even concerned about that? No, because where's my stop? My stop loss is above that range from the higher time frame perspective. Therefore, why am I even worried about it? That's a poor man's discussion. Let's keep going. So here's some questions, and then we're going to go to the charts. For retail traders, logically, let me ask you these questions. Didn't you use a stop loss to predetermine what you were willing to lose in the first place? So if you said, okay, I'm going to put my stop loss here, okay, then what are you freaking out about? Drawdown. Oh my God, I'm in drawdown. Okay, and? So? Okay, number 2, didn't you pre-select your lot size or risk percentage beforehand? So in other words, didn't you know, hey, I'm willing to risk this percentage of my account. So if the trade don't work out, I got a stop loss and this is the risk amount. What's the problem then? Number 3, why are you constantly staring at your trades then? If you've already put a stop loss in place with a pre-selected amount that you know, if the trade goes against me, this is all that I'm going to lose on the account, 2, 3%, maybe 4%, whatever it is, small amount, it's no big deal. Still leaves me with 100, if I start with 100, I lose 3%, I still got 97% of my account, which is the perspective of what? Institutional traders and banks and institutions. It's just a small amount. I still got a whole lot left to play with. So then, do banks and institutions keep staring at every trade they take? Or does that the poor man's perspective, retailers? Are you getting what I'm saying? It doesn't even make sense, does it? Okay? Why are you constantly staring at your trade? If you pre-selected your stop loss and pre-selected your risk amount, what is there left to do? The only reason you know it's in drawdown is because you keep staring at it. If you don't get an alert on your phone saying it hit take profit or an alert on your phone saying that it hit your stop loss, in between that gap, yes, it can bounce around all day long. Who cares? The poor man, called the retail trader. Watch this. What's the worst that can happen outside of your predetermined stop loss being hit? And I'm going to go to the charts and I'm going to show you an actual trade so that you can see that. And by the way, if you want to go to the charts and pull them up while I'm talking, there's 3 pairs we're going to be looking at for examples. The first is we're going to be looking at 3 pairs, AUD CAD, GBP CAD, and AUD NZD. Okay, those are going to be the 3 pairs. So if you want to start pulling up your charts, we're about to go to the charts momentarily, and I'll show you some live examples so that you can actually see this. Okay, all right. Now, last question. Now, can you see why DD or drawdown discussions are the poor man's concerns and not the rich man's? Can you see that? So while the poor man looks like this, hold on. Sorry. I don't know what happened. All right. Sorry about that. Let me turn this off. There we go. Muted my phone. I don't know why sound was coming through. All right. So here's the deal. Here's the facial expression of the retail trader. But this is what rich people look like when they're in their trades. They move on with life and they're enjoying making their money. Okay, so do you want to be this person or this one? All right, now let's get to the charts and let's go. Now I'm going to start with GBP CAD on the 4-hour time frame so that you guys can see this. So, and the reason I'm using the GBP CAD and the AUD CAD is because these are actual trades that I took for our copycat family last week. And the day of this recording is going to be February 11th, 2024. February 11th, 2024, which by the way, I'm so excited because on Valentine's Day in 3 days is going to be my 10-year wedding anniversary to Miss Nancy, Auntie Nancy for you guys. Wonderful woman, just a beautiful person, so I'm excited about that, okay? All right, so here's the deal. Here's the deal. I'm going to show you this because you guys really need to see, for an example, what I was looking at, okay? So what I did, I stripped everything away so it can be bare minimum so you guys can see this with your own eyeballs. At the time when I took the trade for a buy. But what happened was that a news, and you can see this candle with the wick. The news came out, unexpected news. It was not scheduled news, but it happens. And that's going to happen when you're trading. Okay. So if I drop to this 30-minute time frame, you can see that, hey, price just suddenly out of the blue wicked way, way down. But what did it do right afterwards? Went right back up. Why? Because I was determining it from the higher time frame. So where did I put our stop loss? I put it clearly out of the way. Clearly out of the way, just in case something like that foolishness would happen. And look at what I was looking at. See, here's the next low area. Okay, here's the next low. At the Fibonacci level, look at this. You can clearly see 23.6 level, there was support. So that's what I was looking at. I want to keep myself clearly out of the way. And thank God I did. Because look what happened. It wasn't a long-term pullback. It was just a news event. And that thing hit. We went into drawdown because we entered at this level here, at this support level. Okay. We hit here at this support level. It went down. But what did it do immediately afterwards? It shot right back up. And I was able to get us out at around break even or whatever. Okay, that was that. So that's the one where we got out at break even. It just shot right back up on the next candle. And I don't like trading news events like that. So that's the reason why I just jumped us out at break even, pretty much. And that's where, when you see on the report where I said we lost about maybe 5 pips, it was simply because look at the broker spread right here. See the broker spread? Broker spread right here. That's what I was looking at. Okay, right there. Broker spread is what? 5 pips. So technically we did not even lose that trade. So we should be 87-9, not 87-10. But I know we got some technical bougie people who are always try to say something funny style. So I said, okay, we'll just call it a loss because of the broker spread of 5 pips. But technically we didn't lose that trade. Can you guys see that now? So that's why I was trying to explain that. But it was simply because of it went in the drawdown for a while because of news events. That's going to happen in the nature of the business we're in. And then it immediately went right back up where I knew it was going to go. It went right back. Look at where this candle went to. When it bounced back, it started at close to the level of entry where I told you, and then it shot up from there. Okay? You see what I'm saying? See? Y'all get what I'm saying? Okay? Let me use another example. Okay? That was drawdown. We went into drawdown, but it was temporary. Why? Because I was looking at it from the what time frame? The 4-hour time frame. I was not looking at it from the 1 minute, 5 minute, or the 15. Let's go to another example. This one did the same thing. Look at what the same pair. AUD CAD. Okay? The CAD. So CAD last week, you see that? Big wick to the downside, right? So we went into DD. We went into DD. Oh my God, we're in DD. Yeah, we were in DD temporarily. It went down, hit support, and did what? Bounced right back up, and I was able to close not 1 position, but 2 positions on this one in profit. So those who are in the copycat group, you remember we was in drawdown on both positions? Okay, and on the first position that went in the drawdown, I entered a second position on there. So we had 2 positions on there, and when this thing shot back up, we was able to close both positions in profit. Why? Because I'm looking at it from the higher time frame, and my stop loss level, we didn't get stopped out because I already know, give this thing some breathing room. So our stop was, yes, very roomy to give it, and just in case some foolishness like this happened, where they're trying to take out the retail traders, it cannot take out the bigger dogs, because we know what you're doing. And we're not afraid of drawdown. It doesn't bother us. We just sit back and relax. If it didn't hit my stop, then what am I staring at it for? Get what I'm saying? Your mobile alerts on your phone should tell you, hey, this hit your stop loss or this hit your take profit. Now, if you want to glance at it in between there, that's fine. Like I closed out early in profit. We made money. I woke up in the morning. I said, okay, we made some pretty good money off this trade. And so off of both positions. So I decided, okay, at that point, I'll close it out. But was I concerned about it hitting the stop? No, because my stop was below these levels. I know the levels. So therefore, if I'm below the levels, what is there to be worried about? Okay? See? If you know your levels, you can check higher time frames. You can do all these different things, whatever floats your boat to do your analysis, whatever you get comfortable with. The point is when you're looking at higher time frames and you understand what's going on, then you give it a comfortable stop loss like the banks and institutions do. And therefore, if it's dancing around, that's cool. Not a problem. See, look at what level it took out. Right here. See? It took out a level and then came right back above the level. See? Right there. So a lot of you guys are using this and putting your stop loss, little small stop loss right below there. And then they come down, few little pips, take you out, and then shoot right back up into profit. And that's what happened. We came in at this level for our entry. It came, stopped everybody else out, but I knew, don't do it. And when it shot down, it sat for a minute. We were, oh, we're in DD. We got DD on our account. Hey, DD. Oh my God, we're in drawdown. Poor man's conversation. Do you see why it's ridiculous in the retail family to constantly be talking about drawdown? So what? It did not hit your stop loss. And if it didn't hit your take profit, it got time. Leave it alone. Check on it once every couple of hours, once a day, whatever. But relax. Trading should be a relaxed business. It's so simple. Okay, so yes, it went into drawdown, but what happened? It came right back to our entry point and then shot up and hit us into profit, and we closed out 2 winning trades on that one. Are you with me so far? Are you with me, retail family? Again, if I was in the banks and institutions, guaranteed they would throw me out the room for even having this conversation, because they're not going to pay me and waste their time to talk about something they know secondhand nature. This is only a retail family's conversation. That's why I said this is a poor man's conversation. It is not the wealthy. They never have these conversations. And they deal with millions of dollars of portfolios. Okay, let's keep going. Now, what if it goes all the way down? That's a good question. All right, so this one is one where we looked at this one in class on last week, and we said, okay, and remember I told you guys I wasn't going to enter this trade. I told you I wasn't, but I said if I was, and I had to use a stop, and that was when price action was up here. I believe it was. Price action was up here, and I said, okay, I see all this support, but if I had to use a stop loss, where would I put mine? I said I would put mine way down here somewhere. Remember I told y'all that? I will put it out of the way, okay? Or you can put it at the next level here, below that level, okay? I would do that. I said that's what I would do, but remember I said I probably wouldn't enter this trade because I don't like AUD, NZD. It's not my favorite pair. But even so let's say you entered up here and your stop loss is here. All right. I'm going to change this color and watch this, my DD family. Watch this. Let's change this to red. Okay, I'm going to make this red because that's your stop loss. All right, so we got a nice stop loss. Here's your entry. Here's your stop loss. Okay, because here's another support level. Here's another support level. So that's what we saw, right, during class last Wednesday. Even though I told y'all don't enter this one, leave it alone. But if you did, this is where I would put my stop, right below these levels, which is higher than this one. Okay, are you with me so far? Okay, now watch this. So price action bounces around and then NZD news hit. Watch this. See, NZD news. It was news on NZD. All these NZD pairs shot up. All of them did at the same time because some news came out that I didn't see scheduled, but it did. And it came out and it blasted this pair, AUD NZD. So when the NZD pair shot through the moon, the AUD NZD dropped like a rock. Nothing you can do about that, right? We all agree. But here's the difference. Retail family, what was the worst thing that can happen to you? Nothing other than your predetermined stop loss would get hit. And no matter how far down it went after that, who cares? Because if you were risking only 2 or 3% of your account, and you had your predetermined stop loss, the worst thing that can happen to you is you'll get an alert on your phone saying, oh, your stop loss got hit on this. You're still dealing with 97% of the account. Move on to the next trade. And this is the perception that my team have when we're trading. This is why we have a 90% so far. We've been trading in the copycat family since January 1st. So now all of our trades are on display so everybody can see it who's a part of the copycat family. Nothing hidden. Okay, so the truth of the matter is what? The truth of the matter is now you see how we trade. We don't care. Number one, we're not trading from the lower time frames like you are. Number two, we use comfortable stop losses. Number three, we use good risk management. And number four, worst case scenario, if it gets hit, okay, move on to the next trade. No big deal. Who cares? I think last week we were 15 wins and 3 losses. Well, basically 15 wins and 2 losses because I told you that little half a pip was broker spread. So it was really 15 and 2. So, okay, 1 or 2 of the trades didn't work out. All right, big deal. And do you see why it's not a big deal amongst professional traders, but it's a huge conversation that dominates everything And the reason I'm bringing this up is because for some of you guys who are in chat groups and this and that, the biggest conversations, oh, I'm in drawdown. How much drawdown? When are we going to come out of drawdown? When do you think the drawdown? See, poor man's conversation. But if I had a chat group with just professional banks and institutions, you'll never see that conversation in there. Hey man, where you want to go to the golf course? Yeah, why don't we go to the golf course? Where do you want to eat at? Well, they just opened up this new boutique restaurant over here. And what about a helicopter ride and this and that? See, whole different conversation in their chat. They're in the same trade, but they're not talking like the poor man. Why? Because they know the worst case scenario is a 2 or 3% loss to their portfolio, and we move on with the next trade. But in the poor man's retail conversation, draw down, oh my God, draw down, draw down, draw down. And the truth of the matter is you're telling on yourself. Here's what you're telling. You're telling everybody, you're telling the world, I stare at my trades way too much. That's what you're doing. Because guess what? If you weren't staring at your trades every minute of the day, you wouldn't have even known you were in drawdown. Because unless the MT4 or MT5 sent you an alert saying that you have lost that trade, you wouldn't know nothing about it. Do you see the difference? They're over there having a good time, starting other businesses, on a yacht, living in a mansion, doing their thing. They just living. They're in the same trades, but they're living. They're not even looking at the charts because they've already predetermined where their take profit is, where their stop loss is. They're done with the trade. They're done. Work is over. Retail family panicking like they're going to piss in their drawers. Every time, and it's going to move up and down. That's the whole point. Look at every one of these candles. What do you see them doing? If you look at this right here, for an example, look at this right here. We all could agree this is in a what? Downtrend, right? Downtrend, okay? We get it? Downtrend. Everybody sees that, okay? We're in a downtrend, okay? Down. Any questions about that? No, no questions. Down. This was in the down channel. It looked like it was hitting a very, very strong support level. So yeah, you can see why there was a possibility of this thing turning around. Because it was in the downtrend here, but it was tap dancing multiple times off of support. Strong support, strong support, strong support. Okay, came down, came back to that support level and shot up, as we discussed in class. So every time it hit this range, even if it went below, it would come back up, went below, come back up, support, support, support. See, wick candle, news event, came back up, came back up, came back up, came back up, came back up. Okay, so we knew. Okay, so that's fine. That was a very good idea to get in here. But news came out on NZD and it broke through. Okay, and what are you upset about? See, unless you're watching the trade all day long, you would not have even known it was in drawdown. You would have only known if it hit your stop. And then you say, okay, that one didn't work out. Glance at the other pairs, and clearly, and I've taught y'all this many times, I look at the other pair against it, and I notice all of these shot up, so I was like, oh, okay, news event came out on it. Next one, on to the next trade. This one, guess what? It hit down here. We were in drawdown, not a problem. Actually, I know where you're going. It was just a news event. And guess what? I was right. It shot up. And the same thing with this one. See, if you're not staring at it all day long, you won't even know in the first place. Now, we watch it a little bit tighter than you guys because we're trading our accounts, which is now being copied onto others. So, of course, we have to watch it a little bit more than we normally would. But even then, we're not panicking. Drawdown is nothing. It happens. Because you got to give it wiggle room. Going back to this one, I'll close this video. Even though this was going this way, how many times do you see it wiggling? Look at all these wiggle marks. Wiggle, up and down, 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 up and down. Every other candle seems to be turning different colors. You see that? Every other candle seems to be turning different colors. Why is that? Because that's the fake moves that they're doing to the retail trader to fake you out and get you scared. But with a higher time frame, you can look at the overall perspective and say, okay, I see where you're at. And here's the possibility of where you're going to stop, which it was if it wasn't for the NZD news. It was going to bounce up this way. But NZD news hit, not a big deal. Move on to the next one. But the point is, look at every other candle seems to be going in opposite directions. Red and green, 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 red and green. But overall, you can see where it was going. And when it hit this level, it did what? Bounce, hit this level, bounce, hit this level, bounce. Hit this level, bounce. Hit this level, bounce. This one was trying to do it, but NZD news. So you move on to the next trade. See? What is the overall? Not the candle by candle play. And retailers, you are notorious for panicking over the moment candle by candle play versus the overall movement of where this thing is going. And that is why you're going to always fail in the markets if you don't stop it. Place your trades, place your stop loss, place your take profit, and shut the charts off. Mind your business. Okay? Let me know if this video was helpful, because I didn't mind. This took me a while to do the slideshow presentation. I was really trying to help y'all for, some people, they've been watching my videos for years. And so if this video shows up on your feed and you decide to watch it even a year later, I really wanted to make sure this was a very thoroughly done video to the best of my ability to help you understand drawdown from the perspective of the retail trader versus the institutional traders to help you with your growth. Okay, so if this video was helpful, please leave a comment below and let me know. Thank you very much. I'll see you in the next video.